Should we be worried when we start seeing major indices down 10, 20% in Africa?
Well, as an investor, it's never completely comfortable when your markets that you invest in are down. However, we like to draw a distinction between the actual markets and where they are and the underlying investments that we are in and the underlying investments and investors are in. And when we look across Africa, we're still seeing strong growth from these countries. We're still seeing companies generally produce pretty good results. And when we look out to the future, we see Africa with huge potential from its resources. So yes, it's not comfortable, but we shouldn't be overly concerned about markets because a lot of what we've seen in Africa is just noise driven by what's happening in Europe rather than direct effect from Africa.
In general, what would the MSCI index say on Sub-Saharan Africa?
You know, it's down in sort of in the 20% or so for the year. We've seen a little bit up sort of earlier in the last month or so, but it's in line with emerging markets. It's not Africa alone. The whole world, markets are weaker, people are uncertain, and they're not sure what to price assets at the moment.
Obviously the discrepancies vary, but Nigeria, for instance, a country that everybody's bullish about, is down almost 19% in US dollar terms.
Yes.
People are looking for impetus in Nigeria, new products, new listings. They're looking for something to lift this market.
Well, I think so. You know, I mean, obviously sort of 2007 was a heyday for Nigeria, where there was a lot of investment, not so much investment, but loans going to individuals who were then going to be invested in the stock market. Nigeria's had a clean out of the banking sector. But when we look at Nigeria now compared to 2007, we see actually a better environment. I mean, we see very good cabinet ministers being appointed. We see the bank system being substantially cleaned out from what it was previously. So we think actually you should be paying more for Nigerian assets now than you were paying in 2007. Right. That's not the case, which to us leads to some opportunities because we think that you can buy better assets at a cheaper price now than you could previously.
Do you feel the same way about Kenya? It's one of the worst performing bourses in the emerging market space in general.
We do. I mean, look, Kenya has some issues, and one of the issues with Kenya, of course, is that they have a current account deficit. And, you know, while the oil price stays high, they have less exports than they have imports. Next year, we also see some challenges for Kenya. They're having an election. Now, we think the election is going to go pretty smoothly. Obviously, it's difficult to predict, but we're not seeing any untoward signs. But we have some concerns that tourists are going to want to be safer rather than not, and tourism will slow down. They've had a very good tourism season this year. Yeah. It's obviously a huge inflow of revenue for them. We think that there could be some slowdown in Kenya next year, but we think that could provide us some fantastic buying opportunities. In fact, we've even been recently picking up some of the investments in some of the hotel companies.
Is it frustrating when you look at others? I'm thinking of Ghana, for instance. It has all the right fundamentals, democracy, companies that are performing, but there's a liquidity crunch right there on the Ghana exchange, and that's the story for many other countries.
I think that, I mean, that for us is across Sub-Saharan Africa. You know, one of the biggest constraints, someone asked me earlier today, said, what's your biggest constraint in terms of investing in Africa? And I said liquidity, the ability to get that stock that you want, and then when you do need to, because sometimes you need to trade to something else, to trade takes a lot longer, it's more careful, and it obviously costs a lot more because people charge you a lot more because the liquidity is so much lower. But, you know, when I first started investing, and I was sort of 16, 17 years ago in South Africa volumes were tiny compared to what they were now. It's just a progression. We're going to see a change. We'd like to see a change faster than slower, but it is low at the moment, yes.
Variables that you're going to look at to entice investors, GDP is going to be one of them. We're hearing 10% in Angola, probably 7.9%, 8% in Nigeria, a little bit more subdued in Kenya, but generally positive growth that beats the global average.
You know, if you have a look at the top, it depends how you want to measure the top 10 or top 20 countries in the world over the next 10 years in terms of GDP, over half of them are in Africa. It's coming from a low base, but there are huge opportunities there. And we see it as an interplay between three things in Africa. We see it as resources. There's a huge demand from the world for resources. We see it in the 800 million consumers in Africa. The fact that there are more families now in Africa earning $20,000 a year and above than in India. And that's a fantastic consumer market. And we see the infrastructure. As infrastructure is improved, we see a tremendous geared effect on growth. And a lot of that is driven by democracy. If you have a look and you rate free versus not free countries in Africa, more and more are becoming democratic and more providing services to their population, and growth is accelerating.
Hindrances would be things like the currency. It's a major risk. We're seeing currencies depreciating across the spectrum. It's largely because of inflation. It's largely because of sentiment. It's largely because of global issues.
Well, currencies are negative and positive in terms of depreciation. They're negative because they drive inflation, and we don't want to see too much inflation because then the government has to increase interest rates and tackle it in some ways. Of course, if you're an exporter and you can keep your cost base pegged to local currency and you can export for more, it's a benefit. So with currencies, there's always winners and losers, and as an investor, you want to make sure you're positioned correctly for that.
Yeah. Okay, so where are the winners here? Because again, we go back to Nigeria. Everybody's bullish about Nigeria. We've just seen the central bank take a decision to weaken the currency, but before that, it was already being battered.
It was. I think the central bank was they didn't really take the decision. I think the decision was taken for them by the markets. They just caught up with what the markets was doing. Okay, but a 5% reduction in the currency, I don't think that's a tremendously bad position to be in at this point in time. So, I mean, for us, the winners are Sub-Saharan Africa. We think it's a tremendously opportune time to consider investments in Sub-Saharan Africa because the GDP is growing. People have, companies are well run in general. There are some bad ones, but there are also very many good companies making more money every year for the investors, and it's cheap at this point in time.
But we're not also seeing many companies raising debt in the market, so even if you were to invest, you're not going to get involved in the carry trade. We don't see those bonds available.
I mean, for us, we focus mainly on equity markets rather than the debt markets, and it's probably even more so than in terms of debt. Then people are not always coming to the market, especially at this pricing. Why would you sell some of your company in terms of equity if you're not going to get much money for it? As prices recover, we'll see more people put equity into the markets, we'll see volumes go up, and we'll see more IPOs, which we think we really need and we are looking forward to.
Okay, policy decisions that need to be taken. I've just spoken about the MPC in Nigeria and the decision to devalue the currency to 155 naira, but they've got to manage inflation, they've got to manage so many other things, and there's got to be a working in tandem between central banks on the monetary side and the treasury on the fiscal side.
Yes. We think Nigeria has pretty much done that, because if you ever look at inflation in Nigeria, inflation in Nigeria seems to have peaked and is coming off, and they started raising interest rates sort of around about February or so, whereas Kenya tended to be a little bit back-footed and held back, and had to do sort of 5.5% interest rate in one foul swoop a month or two ago. So Kenya really was on the back foot in terms of that. So it shows that really countries need to be a bit proactive in managing these things. And there we give a tick to Nigeria and we say, Kenya, hopefully you learned a bit of a lesson. And
a final question, that's on the monetary side. On the fiscal side, in Nigeria, you keep on hearing the governor saying, support me, Minister of Finance, support me by fiscal restraint. Support me by ensuring that the money that the government earns is not used for recurrent expenditure, wages for the civil servants. Let's start building those roads, those schools, those electricity pylons. Let's invest as governments. That's across the board.
It is across the board. But if you travel in Lagos, and I mean, last time I was there a couple of months back, they're building a new bridge between Victoria Island and Lagos Island. You go to Kenya at the moment, the traffic's even worse than normal because there are roads going everywhere, new south bypass, new north bypass. So the investment is going in. And these countries in general have low debt to GDP figures, so they've got the ability to invest. Okay, there is some leakage around the sides as well. We'd like to see that tightened up. But the new finance minister in Nigeria is a very formidable and well-respected person, and this putting her there, we think is a great vote of confidence in the future of Nigeria.